Wasabi! Yeah, good morning. ADP out. Another dumb prediction. Also, it's Fed Day. FOMC. Nice. Then tomorrow, Bank of England. Then the next day, non-farm payrolls. What a blessed week we have. So without further ado, let me just say welcome to Forex.Today. Let's go. Let me remind you that trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Ni hao ma! Hey, how you doing? Yeah, FOMC is out. Hope says, hey, the Braves won the World Series yesterday. Did I watch it? No. After trading Asia, doing all my work and analysis, no. Living the dream, though. Went upstairs, had a snack, had a beer, went to bed. Gone. Yeah, so, yeah, living like a rock star in bed by 10. It's fast asleep. I'm tired, man. So anyways, hey, good to see you. Welcome. Hey, there's 20,000 subscribers thereabout. Why don't you subscribe too? We're all currency traders. We love things technical. We love things fundamentally. So we got our global macro on. Money flow. Remember, currency comes from current, and current comes from flow, cash flow. Okay? So anyways, that's what it's all about. Macroeconomics, central banking policy, fundamental analysis, technical analysis, trading, scalping, spot, swing, trade, carry position. Love it all. Theta says, hey, ADP 571. Hey, good. Great. So thank you for that, Theta. So like I said, while you're here, why don't you click the thumbs up button? I'd appreciate that. Just tell YouTube this is reasonably quality content. That's all. By the way, if you think, why does he keep doing these YouTube videos so that he could become a YouTube millionaire? Why should I click the button? He just needs that to make money. Yeah, I think I'm up to like $78 a month on my YouTube income. So I'm not whoring myself out. I would like for other like-minded people to join our community. I think, almost 20,000 is just amazing. But there's 1 or 2 seats available at the back. So, hey, that's all I'm saying. Also, the more the merrier, right? We get good questions. And as you guys know, very often someone will ask me a quick question and you'll get a 22-minute answer. So, and that's usually the most rewarding, right? Part of it. So anyways, going on with today, we will go through the charts. We will do dollar pairs, yen pairs, gold, oil, Bitcoin, and anything else that you want. That's great. I'll do that. Meanwhile, guess what? There's no monetary fee to be part of these YouTube streams that I've been doing for years and years and years and years and years. Remember, I've been doing live streams, not just trading. I've been doing live streams longer than your last guru has even been a trader. Okay? Which means your last guru was in high school when I was trading Forex live on YouTube and Hotcom and at FX Street and all that kind of stuff. So anyways, so there's no monetary cost, but there is an obligation, and that is to visit tradersway.com, open up a demo account. So do it. Okay? Kick down, come clean, don't be a holdout machine. Now, this is actually in your best interest because you need a broker that doesn't trade against you. You need a broker that you trust. You need a broker that actually executes your trades into the interbanking system. So give them a try. You need a broker that actually pays you the swaps. I told you a long story yesterday, but I recently looked at a big London broker just because someone else I knew was trading, and I'm like, well, who's your broker? And they're like, it's this group, and then they wanted me to help them with their accounts or whatever. So anyway, so I'm looking at this account at this other broker, and it's a big broker, and they're double charging their clients. So instead of paying them swaps, they're charging swaps on both sides of the trade. I'm like, oh my God. And it just reminds me, oh, thank you, Traders Way. Thank you for just being, honest. Thank you. Thank you for that, Traders Way. So look, honestly, I've been reminded multiple times, they've earned my loyalty and respect. So look, maybe they can earn your loyalty and respect too. That's it. Give them a shot. Tradersway.com. Okay, so how do you feel? I'm so happy. Yeah, hey, 571 on the ADP. That ain't no joke. Okay. Lucas says, hey, man, great big pig is maybe waking up. Well, first of all, yes, on our support line. So let's just start there. Okay. On our support line, which is good. I mean, Lucas, how long have we been watching this now? I guess pretty much 3 weeks, right? So that's cool, right? So we got lucky there. But also the big news is tomorrow. Okay. Cool. Hope's trading Tesla with my chart templates, and it's working. Of course it's working. By the way, Hope, I like you. You're cool, Hope. Hope's like, hey, I'm in this, I'm in that. Like, Hope's trading stock. Hope is trading cryptocurrencies. Hope is trading Forex. So Hope is on everything, which is good. A trader's trader, huh? A trader's trade always, right? Anyways. Okay. Yeah. Look who says, hey, my charts are on. Yeah, well, first of all, the last few days I've been basically in wait mode, pause mode, all that kind of stuff. So I'm not sitting back there as much as before, but I've been doing a lot of research. Right? I've been doing a lot of research and all that kind of stuff. So I'm sitting here, but I'm starting to realize, like, this chair, and it's not a bad chair. It's an expensive chair. It's a very expensive chair. But I've been sitting in it so much, like, I'm starting to get hip problems. So I'm thinking about maybe going outside this week. So anyways, I've been focused on research more than trading because I'm setting up the next trades. That's all, right? But Robin says he's been using the templates for trading stocks too. Works like a charm. Yeah, of course. And hey, thanks, Robin. Just, the wink, wink, nudge, nudge. You know what I'm talking about? That's cool, man. Robin's cool too. Robin and stealing. That's awesome. Robin and stealing pips, breaking hearts along the way. That's cool. So anyways, going back to this, Lucas says, hey, we're finally getting a reversal, but on the line that we drew 2.5 weeks ago or 1.5 weeks ago, whenever it was. So that's all good. You still kind of need a down Z before you get an up Z, and then, Bank of England tomorrow. So look, it's still technically, move this to an hour here. It's still technically bearish, right? But on this time frame, definitely setting up for a plausible, doesn't mean it'll work, but you could postulate a counter trend, which is interesting because this I would classify as a counter trend. So like a negative times a negative is equal to a positive, right? This counter trend of the counter trend leads to our trend. Cool. Right? Is that cool, right? Cool. Hey, Biden's back from the G20. Did you see the pictures of him sleeping? It reminds me of my experience at Harvard in my cohort. I had a great cohort, like legendary. We're legends in the school. Anyways, one of the guys was the biggest partier, great guy, great personality. Everybody loves this dude, but he likes to party, and he likes to party hard. The point is, he could go out and be bigger than life. And no matter how bigger than life he is, he will show up the next day and get the job done and do a great job. So in that situation, it's like, dude, by all means, if you're a baller, if you're a partier, if you're a legendary, whatever, as long as you hold your own or better. Like if you're on my team, I don't care really your extracurricular activities, but when you show up, I need aces. You know what I mean? And he was like that, right? He was like that. You can count on him no matter what. But also, you want him on your team because when you go out, you have a great time and he keeps it light and everybody, you know, it's good vibes, but he shows up and does the job no matter what. I love that. So when you see Biden sleeping at the G20, but then he's going to say, oh, well, I was up late hanging out with the Pope. Well, were you supposed to be hanging out, having dinner and you know, tequila shots with the Pope? Or were you supposed to do the G20 meeting? Like, dude, if you can't make it through the G20 meeting, then don't go out partying, right? Like, dude, you got to hold your own, man. You got to hold your own. He's not 80. Well, then, you know, whatever. Then there's a problem, right? Like, dude, if you're there for the G20 meeting, then max out aces only on that G20 meeting. Negotiate better contracts on behalf of our country. You don't sleep, dude. Then what's the point of even going? Right? So anyways, that's not me being sort of anti-Democrat. It's just like, dude, if Trump was there and fell asleep, I would say the same thing. Okay? You got to show up and crush it. Otherwise, you're not a good representative. That's all. Okay? Cool. All right. Right. So G20, we're not getting much out of that. All right. Well, I guess we didn't negotiate a good deal if we slept through the whole meeting. I know that's unfair. You didn't sleep through the whole meeting. But did he come back with any big deal? No. Then it kind of feels like, I don't know, whatever. So, whatever. We'll see how that goes. We'll see if it was worth it. You know, to be fair, though, mate, it does happen. And those meetings are terribly boring, right? But, dude, you still got to be a baller, right? And if you're tired, leave. Walk out. And they're like, where are you going, Joe? You're like, dude, I'm the most powerful person in the world. I don't have to tell you why I'm leaving. Well, JP says, what's wrong with being anti-Democrat? I didn't say anything like that. I'm Canadian, right? I live in America. I made some Americans, right? What a great hobby. What do you do for fun? I make Americans. But I ain't American, so I can't vote. So I'm not Republican. I'm not Democrat, right? Right? And what's wrong with the power nap? You don't do it in public, right, Harvey? So like I'm saying, like, dude, you need a 30-minute? Get up, walk out of the room. You're president of the United States. You're like, dude, I don't know. I need to go bomb somebody. Like, you don't have to answer anybody. Go back to the hotel room, take a power nap, right? Clinton would probably do a line of cocaine and come back fired up, right? Like, woohoo! That'd be Clinton, right? Yeah. So, but you got to do it tactfully, right? Okay. That's all. He was there to enslave South Africa with more debt? Yeah, totally. Totally. Right? All right, cool. So anyways, let's go on with this. ADP, good number, positive sign for global macroeconomics. Remember, the central banks are looking for two things, inflation growth, but wage growth. And to get wage growth, you need labor demand, but also people being labored, employed. You need employment to go up and then wages to go up. And then you have household spending go up, which increases consumption, which increases GDP. Okay? Right? Cool. So anyways, pig, maybe. It's a bit early on the 4. On the 4H, it's a bit early. Let's go on 1H here. Euro dollar. Yeah, okay. Okay. Let's see. I have 2 lines that say this might be support. Oh, really? Okay. So I think we did all right identifying these as potential. And it's not going up, but it's not going down. That's not real reason. What I see here, so I already marked this out last night for the day trading group. Because remember, the day trading group, like we all meet here at 8 o'clock in the morning, right? Okay, we all meet here at 8 a.m. Then we meet again at 3 p.m. for the New York close. Then we meet again at 8 p.m. for the Asia Open. So we have an open, a close, and an open, and these two here, we're front running the next day. At 8 a.m., we're just watching our trades either get knocked out for, a loss or a break even, or we're watching it run and we're moving stops. At 8 p.m., if anything, we're moving stops. We're not actually entering new trades, right? Well, first of all, ADP is not non-farm payrolls, but did I discuss it? Yeah, it came out good. Enough. That's it. Okay. So it's good news. That's enough. So it fits right into what we're already trading. So anyways, going back to this, not down isn't up, right? And right now there's 2 thought processes that look something like this. And we don't have follow through because we have FOMC later. So here's the way I think about this. We want this, let's say, up. But for that to occur, you need new money in. You need buyers. Okay, you understand that? New money in. But let's talk about that. Let's say you're an institutional investor. Smart money. Okay, would smart money put new money in just hours before the FOMC meeting? Knowing that it'll directly impact the value of the US dollar? Would smart money do that? They're like, we don't really know what the FOMC is going to do. We think we do. We think there's going to be a announcement of a taper, 15 billion a month, and that they're going to end in June. Like, we think we know this. Research shows that they're probably going to do all of that. But the thing is, you still don't know. There is a level of risk. And even if he does, right, even if Jay Powell does do what we all think he's going to do, we don't actually know how the market's going to respond to it. So, like, why would they say, yeah, you know what? We should drop $1 billion now. And if it drops down here, it's only $10 or $20 million lost. What's the big deal? Nobody thinks that way. Do you know what kind of fund says, you know what, it's no big deal, it's only a $20 million loss? A one that's on its way to lose $100 million. I once helped a trader, right? So we did a screen share. I'm like, log into your account, show me what you're doing. So he logs into his account, and he was down something like $7 or $8 or $9 million over the course of 2 weeks. This guy was just buying lower lows as much as possible. It was just, and it kept falling. And I said, dude, did you just lose like $7 million this week? And he's like, yeah, it's no big deal. Well, if it's no big deal, guess what? He went on to lose more money. If it's not a big deal, then you're going to continue doing what you're doing. Everything needs to be. So to a professional trader, everything's a big deal. Okay? But can you imagine that? Like, honestly, this guy's like, yeah, well, it's a big. I'm like, dude, I think you're the worst trader I've ever seen. You're doing the same bad mistake over and over and over again, except you're losing millions and millions of dollars quickly. And he's like, yeah, it's no big deal. Wow. Then, of course, he's going to continue losing big money. Amazing. If that doesn't get you to wake up and change, right? Right? Hush, hush, Raymond. Shh. Secrets. Keep it in the family. Yeah, keep it in the family. Huh? Don't you remember, Raymond? You got to watch Godfather 1 over again. You got to watch it over again. Never let people outside the family know what you're thinking. Huh? Sonny, remember? He told Sonny to shut up. You got to forgive me. Right? He says, I spoil my kids too much, and sometimes they don't know when to be quiet. And then he says to him later, Sonny, what's the matter with you? Let me tell you something. Never let someone outside the family know what you're thinking. Right? Yeah, Godfather 1. Epic. I'm telling you, epic. Yeah, it's true though, right? I'm telling you, right? It's sort of like if you want to understand man code, you got to watch Godfather 1 and Godfather 2. It's all about man code. So if you want to learn how to be a man, or if you want to understand a man, man code, right? You got to, right? Yeah. Yeah. Well, whatever. Look, right? You got to earn all of that. You got to learn it. But anyways, so euro dollar, look. So some people are like, oh man, you should be buying this. You should. Whoa. Okay, we were down here, then we got the ECB thing, and then not only did it drop 382, not only did it drop 50%, 618, 786, 100, oh my God. So then we create this giant lower low, and look, I don't know about you, but when I see a lower low, I'm thinking this. Because I have a certain thought process. It's not always right, but it puts me in similar situations in which I handle it the same. You understand? Like, my goal isn't to be right all the time. My goal is to be consistent so that I know when I'm wrong. So I'm not trying to beat the market here. So in a situation where there's a lower low, right? And thereby, let's call that a lower high. Okay. And you can see, right, my biased pivots are sloping down. So statistically, it's bearish now. In a situation like this, regardless of my longer-term hope, my longer-term bias, what I think is going to happen today, tomorrow, next week, irregardless of all of that, this is bearish. It's now technically a bearish trend. Lower high after a lower low, that is a trend. And as far as I'm concerned, this downtrend will last forever. It'll fall and fall and fall and fall and fall forever until it reverses. And I'm a bull, so I have to wait for the reversal before I start dropping money bombs on this, right? So it's close, and you could read into that, but I don't want to read in that. All I see here is the lower low and a lower high. So that should produce or might produce a lower low. Now, if it then goes up and makes a higher high, guess what? I can buy the higher low. Because now I'm in this game here. Okay? But that doesn't exist yet. It's close. It's hopeful. Oh, if I only bought it here. Why would you buy that? It reminds me of my son and I were having lunch. Oh, I don't know, sometime in the summer, early summer probably. We're having lunch. We're at a burrito place. We're enjoying our burrito. And we're talking about Dogecoin. And he's like, why didn't you buy like Dogecoin when it was 0.000000? Whatever, right? I'm like, well, it's worthless. It was worthless then. It's still kind of worthless now, but there's just a value been placed onto it. So if I bought $100 or $1,000 or $10,000 of Dogecoin when it was free, it would have been a dumb idea because it didn't have value. A penny would have been too much. A fraction of a penny is still too much. So like down in here, like, do I buy that? Well, it's got low value. Okay? It's got low value. Oh, but if you buy it, it might go, it'll go up in the long run. Well, okay. I don't want low value. I don't want cheap. This is cheap. If you buy that, that's cheap because it used to be here. Now it's here. That's cheap. But I don't want cheap. I want value. Okay. So I wouldn't buy $1,000 worth of Dogecoin when it was free because it's not worth anything. You have to understand that, right? Cool. Now, I did buy Shiba Inu because it's fun. And actually because of that conversation I had with my son. So now I own millions of that. So now we can watch it and kind of talk about it from time to time. Okay. So that's why I bought it, just to have conversations with my son. Okay. So I need to uncover value before I invest. Do you understand? I'm investing into value. I'm not buying a trade. I want to invest into value. So I want to see that we breach this level here, make a higher high, and now I can say, oh, that's interesting. Now we have a trend. We have a bottom. We have a higher high relative to the resistance. Then we have a higher low, which we don't know if this is going to be a higher low. But if we're at the higher high, then I can go back and say, oh, that was a higher high. That was a higher low. So now I can draw a trend line. And then you watch this new higher high, draw that trend line and say, oh, goody. I'm going to either buy one here or here. And my new trade plan is this because I'm buying something that I believe fundamentally and technically will appreciate in value. Versus, I think it's going to appreciate in value. I bet you it'll appreciate in value. In fact, many people don't even think that. They just buy it because it's support. That's okay. And this was discussed actually as a counter trend trade, which is perfectly fine. But I'm doing a different type of trading. I'm trying to uncover hidden value. Okay. Wayne, what is the probabilities for the Fed to go to fully taper? Or to start in January, December? Well, here's the issue. So I don't know the probabilities, but he said probably November or as soon as November. He specifically said that. So if they don't announce today, instead, maybe it's December or maybe it's January. Here's the problem: uncertainty. Why not now? If you said, as soon as November, then why not November? Are things bad? Have things changed? What about? It's just becomes very emotional. My wife and daughter watch a show where like a plane shows up in New York, but it's 3 years late or something. They're like, where have you been for 3 years? And they're like, what? We got on the plane and landed, right? And it's mysterious. What's going on? And everything is so dramatic. Every scene, oh, well, what are we going to do? Well, what does this mean? Oh my goodness, are you thinking what I'm thinking? Like every scene, they're so emotionally dramatic, and I can't take it. I can't take it. I just can't take it. And so I think of that, like the traders would just freak out, right? Like just, what does it all mean? What are we going to do? Is it? And I'm like, whoa. Right. Whoa, dude. Whoa. But anyways, Jay Powell said November, and I would suspect it's going to be November. Yeah. But if he doesn't, that's going to be interesting. You know that show? It's just so funny. Scene after scene, they're like holding their breath. Oh, what are we going to do? Lots of pacing and stuff. Oh my God, my death date's coming up. This is just, for someone that's not very emotional, I just can't take it because they're so emotional about everything. The orange juice or the milk, I can't decide. Oh my God. Oh my God. I just can't handle it. But you know, the way I look at it, you know, I'm watching this thinking, yeah, this is how people trade. This is how a lot of people trade. Everything is just so dramatic. So dramatic. Holy moly. Okay. All right. So, So what do we know? Look, I isolated this as support. Okay. So you don't have to be a rocket surgeon to just see we're still sort of trapped, but there's some possibility of an up, and then maybe I'll get more involved. FOMC obviously is big for the dollar, so throwing down trades now is a little bit risky and all that kind of stuff. But look, if you can do it and jam your stop, by all means, we'll call that a high volatility event-driven strategy, because you know that there's an event that's going to create volatility today. So, and if you presuppose it's going to go up or down and get that trade on now and able to jam your stop before that, then, okay, and then maybe it does what you need it to do. The ideal there is, if you're going to trade, now I don't think these are great conditions, but look, if you got to get a trade on because you see it, the first thing I want you to think about is, can you get your stop to break even before the interest rate press release goes out? Okay. And especially before the press conference, because that's when questions happen. Okay. So that's it. That's my advice to you. If you feel compelled to trade and you take a trade, just realize it's a high volatility event-driven strategy. Okay. Now, typically an event-driven strategy is like merger arbitrage. That's an event-driven strategy. So you're an event-driven fund if you do merger arbitrage. That's how you get classified. So someone could look for you in event-driven, and they're like, oh, well, what do you do? Merger arbitrage. Oh, well, we're interested in investing. In this case, the event is the release. And the release, well, we assume, is likely to create volatility. And so you're trying to trade that. So you think about, well, if it comes out as expected, it's not a big game changer. But if it comes out and then it's clear there's no taper, then, ooh, you could see that. Okay. Now, Greg says something. I want to comment on it. Back here, I said, where's the new money going to come from? And you guys said, no, big money, big institutional investors are not going to invest right before the news. They're not going to do an event-driven strategy. Because let's say the odds are 50-50. Well, it sucks. That sucks when you have $1 billion. It's great if you have $50 and you're trying to turn it into 100, right? Right? You're trying to turn a nickel into 15 cents, so you gamble the nickel, right? You don't gamble $1 billion. So what's the next likelihood? Bulls exit to reduce risk. They don't want to take risk, but what if they reduce risk? Then you're back down to here. That's very plausible. Okay? So if they're not likely to get in, they're more likely to get out. Right? Look at that, baby. This has been trending since June. And we're kind of in the middle. Okay, watch this line here, right? We're right here. Here's the low. Here's the high. Okay. Do you see hidden value? Okay. It seems like we're at the fair market value, right? Or something close to it. Fair market value is actually above us. Let me show you how you uncover fair market value. Where does it go? What indicators? Moving average. Yeah. Okay. Fair market value is about 118. Yeah. Uh-huh. If you guys remember my book, I talked about a bow, as in a bow and arrows. I can't even draw it. This mouse won't let me do it. Let me try that again. You have a bow, and it's stringed like this. So here's the thing. When the string is pulled back like this, there's a lot of tension, right? And the farther you pull back, the more you're bending the bow and the more tension you're creating, right? So the farther away you are from, this inertia sort of steady state, the farther you are away from this magic line here, the farther away, the more it wants to snap back. It's the process of turning potential energy into kinetic energy, right? The more you pull back, the more potential energy it is. But what does it want to get to? Back to its steady state. So the interesting thing is the farther away you get from the 200 EMA, the more it wants to go back to the 200 EMA. Okay. Okay. So we could maybe plausibly be on the long run setting up for something more like that. Okay. And at least getting back to the fair market value. Okay. And you can see these, it's an important line. I use an EMA, not an SMA, but it doesn't really matter. A big package from Congress could end the euro-dollar drop. Well, okay, so we could talk about that. So, and by the way, are they actually close to that? I have my doubts, but I'm not following it that closely. But what we know, let's talk about, again, a comment from Greg. GDP is equal to consumption plus investment plus government spending plus, okay, money from foreign investors plus the money we're spending on foreign products and services. So money out, money in. No, money in, money out. Okay, but this is all international. X minus M is all about international. So we're talking about internal here. So if you're in an economics class, let's say if you're in Economics 101, so you go to university, you sign up for an econ class, they're going to start you with a closed economy. So you're just going to have this. Okay. So if the government comes in and says we're going to now spend 1.75 trillion more than we currently are spending. So G right now is the budget. Interesting thing about the government is you set a budget and you're going to spend it no matter what happens. And then the following year, you create a new budget. Okay? So actually it wouldn't be G underscore. You'd call this like G prime to say, well, this is predetermined by the budget, and no matter what happens, it's going to get spent. Where like with investment, the interest rates could change and that could impact investment. Interest rates could change and that could impact consumption. Employment levels can change. That would, right, kill consumption, which would kill investment. But no matter what happens to wages, to employment, to inflation, to interest rates, the government's going to spend the budget. So typically it's like fixed, right? So now you take your fixed budget and then you increase it by 1.7 trillion. What does that mean? Well, it's no longer fixed and G is increased, so GDP increases. But it's a domestic issue. But now if the government starts selling bonds to raise the money, and foreigners now, let's bring our foreigners back. Okay? We will export bonds. Okay? And what happens? Foreigners exchange their currency for the US dollar so they can buy, because remember, if the United States is selling bonds, they're selling bonds in dollars, foreigners are lending US dollars to the US government. So the foreigners first have to buy the bonds. Well, before they buy the bonds, they have to buy the dollars. So the demand for dollars goes up and the dollar actually gets strong, right? Because the government now is borrowing more dollars. Now you might argue, well, maybe the supply goes up, but the supply doesn't go up because there's a fixed number of dollars floating as currency in the interbanking system. So the value goes up, not the supply. The Treasury issues bonds. So the government will say, okay, we're going to increase our spending by 1.75 trillion. So now the Treasury, Janet Yellen, not as the head of the Fed, but the head of the Treasury, issues more bonds. Okay. And that's not increasing or decreasing supply. That's just increasing debt. Okay. So anyway, so foreigners will have to demand all of that. Now, there's a problem here. Okay? There's another problem here. So you might say, well, that's not good. Okay? Now, the next thing is, well, what's investment? Investment is business spending. Very often, businesses go to the bond market and issue bonds. Aha! So we'll call these corporates. Okay? Bonds versus treasuries. So if the government is issuing treasuries and businesses are issuing bonds, now the supply of bonds or treasuries, kind of the same thing. One is government bonds, one are corporate bonds. But now what? Well, money that would normally go to the corporate bond market gets diverted Okay? And businesses lose out. We call that crowding out. And this could be a problem because the government's trying to save us by increasing spending, but then what will happen is corporations can't raise the money they need, or to attract more investment away from the government into the corporations, they offer to pay a higher interest rate, which means profits fall. So anyways, investment goes down. Therefore, you could end up laying off workers because the cost of borrowing's gone up. So then you lay them off and consumption goes down. And wait, the government did all this to help us and protect us and save us. But the crowding out could actually have negative adverse effects, especially since this is so much money that they'll keep issuing it for 1 year, 2 years, 3 years, 4 years, 5 years. 8 years from now, we'll still be issuing government bonds to try to pay for what we're doing now, which means this adverse effect could happen later down the road when a company can't borrow any money because they're competing with the government now to borrow money. The government is borrowing money. Businesses are borrowing money. And so they're competing with each other. You see that? They compete with each other because there's only so much money. So now you're like, well, I have a risk-free bond at 1.6% or a riskier, I can invest into a treasury at 1.6%, which is risk-free, or 2.4% from a corporate. So even corporations have to pay more right off the bat because they're not risk-free. And so now if the Fed raises interest rates and the 10-year T-note goes to 2.2, let's say 1 year from now, then that same corporation bond will have to probably go to like 3.6%. And it's getting more and more expensive. Okay? Because corporations will now have to compete with the government they're paying taxes to. Sucks, huh? How would you like to have to make regular payments to your competition? All right, kiwi. Okay, all the way to resistance. I'm not interested in buying it. Boop, 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 boop. Okay. And we did have a conversation about this, I think even last night, about doing this counter trend trade. And I said, well, the best you could possibly hope for is going up into here. And I don't know if that's enough pips for the risk. But we definitely, I think it was this one or something very, very similar. And I said, I get what you're doing. You're doing a weekly counter trend. So the green zone is a weekly counter trend into a monthly trend. Okay? Weekly counter trend, monthly trend. And I said, look, there's a level of complexity to that setup. I see it. I don't disagree with it. I said, but you might want to look at this and say, well, if you're going to have that level of complexity, you might want to get paid more than that. Or, because the next question is, when would that trader move their stop? Well, I'm like, well, if you're going to have a trade set up like that, with that level of complexity, which is all correct, but you need to get this or this. You need to get paid for the risk you took. It'd be a shame to take such a complicated setup. Remember, there's 2 time frames going on here to make this happen. A counter trend, which then predicts a new trend, which, wowzer, then you just need to get paid for that. That's all. So to do all that and then get here and get out, that's it? Really? Okay. I don't know. So I'd rather wait for maybe something more. Okay. Or something, right? Like, I don't know what the thing is, but so my advice was, okay, yeah, you could take it. Yeah. And then, yeah, you can jam your stop. That's fine. but then let it run. Just get paid. Yeah, I want to make a point about that. These green zones and red zones, they don't mean buy and sell. Okay? They don't mean buy and sell. So if you're looking at that and you're like, that's Wayne's sell zone, no, it's not. You don't understand. If you need that, then you should do something more like this. If you need a green means buy, then you would do like, let's see, position trading bullish bias. Okay, that would be a buy zone, but that's different. That's not a pivot profit zone. That is a buy zone. So make sure you understand what you're doing. Don't try to come to a free webinar and try to figure out what I'm doing and then do that. Pay the money and join the group. Yeah. No, they're important, but they're not buy zones, right? So that's why, like on the other one, I was saying this is a counter trend more than it is, right? So like, for example, let me set this up the way that I think it has been. Okay, so we'll zoom in here, and then I got to update my indicator to give me false. So in fact, let me update this. Okay, great. And that's weekly. So let me do this template, save template. And that was bearish swing, wasn't it? Swing trading bearish bias, save. Update done. Okay, good. So the next time I'll have that. So here's how I'm interpreting this. This is a weekly trade plan. This now is a sell zone. This is not the same as the other pinkish areas. Okay? This tells me for this week, and we knew this last week. So let's say here's Friday's close. What we knew on Friday's close as a bear, okay, that the sell zone is here. Okay. The other thing we knew on Friday, that in that black circle, the other thing we also knew as bears was this is where we were going to take profit. Okay, that's that. So I see this move here not as buyers buying. That is not bulls buying. That's why I'm not buying it. Right? I don't buy that because I don't believe buyers are buying it. It's bears exiting positions and going neutral. That's neutrality. They said sell, which I totally understand. And they said, hey, if we hit this area, I want out. So they throw down limit orders. So imagine you put a limit order here. What needs to occur? Your trade has to go slightly below because you have to cover your spread. Let's show the spread here. Properties, comment, show ask line. Boom, there's the spread. So you see, it's not the black line that has to hit 7103. The red line, okay? The red line, so you have to, price has to go below to execute your out. So depending on where your rollover is, because some people's rollover is here and some people's rollover is here. And if you're in Switzerland, your rollover is probably over here. So you have different rollovers and different interpretations of what yesterday was. Because remember, the calculations are based on low, high, and close. But in this scenario, right? And so usually your rollover is either 5 p.m. or 6 p.m. and that'll just slightly move these a little, right? Someone else's target might have been just slightly lower. But my point is, I understand this completely, and that their target was drop below that so I can cover my spread, and what happens is people get taken out. This is only an out, not an in. The other thing it tells me is that the bears are alive. There's a real threat here. Whoever sold here knows what they're doing. Whoever exited here knows what they're doing. So what do I think they're going to do next? They're going to sell here. That's why I don't take trades there. I don't take that trade. Now you're like, well, Wayne, it's up 80 pips or whatever, dude, whatever. You do you. Okay? So the next thing that I would want to see is a confirmation of this, and then a higher high, and then a higher low. Now, why would I do that? Because it tells me the bears never got back in. Or the bears hit their targets and they're done. Or, and here's the bigger part of the or. Okay, bulls did not buy that. That's bears exiting. But to get the higher high, bulls did buy. And they squeezed all the bears out. And the bears couldn't hold their defense here. Okay, then you get some profit taking from the bulls. And then the bulls are going to want to redo. Okay, and the bulls are going to want to take it north. So I only buy when I believe there are buyers. Okay. Now, the interesting thing is with central pivot points, I actually don't care about them that much. So if your other guru says, "Oh, well, what the plan is to sell it off the central pivot point," then they don't actually understand. They're just rehashing somebody else's book. They read a book, maybe they read my book, maybe they watched a video, now they're selling you a training course on pivot points. If they tell you to sell off the central pivot, they actually don't know anything. Okay? So you got to be careful of that. Okay? Now, Hopes is right, resell the midpoint, and the midpoints are more important to me. So as a bear, this is my best selling price I could possibly hope for. So I know I'm 100% convinced bears sold that. And now I'm 200% convinced that bears sold it because they also got out where a bear is supposed to get out. What about R1? I don't like R1 at all. R1 predicts S1. That means we're range bound. Remember, I'm a trend trader, right, Theta? So if we are buying at M2, going to M4, buying at M2, going to M4, buying at M2, for example, what do we have? A trend. Okay? If we have buy it at M2, take it to M4, buy at M2, take it to R1, take it to S1, what do we have now? Not an uptrend. Okay, now we're stuck here. Because you got to remember, how do you calculate R1? Well, you have to look at yesterday's low, less yesterday's high, and that means the close was probably like that. So then it comes up, and then it comes up, and then it hits the R1 and it can't do it, and uh-oh. Right? So the R1, the low close is predicting the R1. The R1 is predicting S1. Now you're caught between support and resistance, which means there's no trend. It's not bullish, it's not bearish, it's neutral. And as everybody in the day trading group knows, because we cover it so intensely, you lose money in the sideways markets. And by the way, both bulls and bears lose money in the sideways market, unless you're scalping. And in that case, that's the greatest thing because you're trying to survive, right? But you can't build. So imagine like this. You can't build wealth. Cannot build wealth in a sideways market. If you buy a house for $1 million and it doesn't go up in value, you haven't created any wealth. You're like, well, it hasn't come down. Okay, that's good. But you are paying interest on your mortgage, and you're buying new windows and a new roof, and you're paying someone to mow your lawn. Dude, it's consuming. It'd be nice. Huh? My house went up 2% last month. Holy shit. So I'm generating wealth. Okay, my net worth goes up, which is good. So anyways, I look at this and I say, oh, bears are going to sell again. That's why I don't buy this. So you got to be careful when I see people in the chat. They're like, oh, yeah, this is a buy zone. Oops, sorry, that was my mouse. This is a buy zone. No, it's not. No, it's not. No. When you see the standard operating pivots, right? So let's go to the standard weekly pivots. Okay. Now that pink zone is different from the one I just showed you. Okay. This does not mean sell. No, it does not. This does not mean buy. No, it does not. Pete says, yeah, your house went up 18% this year, which is redonkulous, right? But I was just saying this month. In a month, it's crazy. Whoa. 2%. Wow. Okay. Wowzer. Anyways. So if you're asking then what does it mean, you need to join FX boot camps. You got to get fixed. I don't know if I can fix you, but I can help you fix yourself. Cool. See? That's why I don't do that. Cool. Let's do what? You guys want to do gold, oil, and Bitcoin next? Okay. Gold. Okay. So what does this tell me? If this is bearish, okay, so now you'll say, well, Wayne, I see a triple top, lower high. Good, then you can be a bear. You could be King Kong pounding on your chest. Okay, if you're a bear, this is your target. That's your out. Get out. Okay. You are now approaching 1764. And if you're a bear and your target is here, you are about to be challenged here. So let's say you did sell somewhere up here and your stop is up here. You want to move your stop. Because if there is a bull in this market, they are going to, in the next little bit, probably, because I don't actually know what people are going to do before they do it, But if there are bulls, that's what they're thinking. And they're thinking the same thing as you, where they're going to take it to the extreme. By the way, none of this is my opinion. That's just what it says. That's just what it says. So I don't know anything about gold. Don't know anything. Bears are going to take it down to 1730. Bulls are going to take it up probably to beyond 18. In fact, they're going to, right? They're taking this to 1850. Bears are taking this down to 1700 max. Which one? I don't know. That's for you to decide, right? Okay. But I can tell you that's what's happening now. And in the future, if I was a bear, I would expect the up to happen at 1764, and then I would sell it again. And if, of course, if that occurred, if I can confirm the top, so we got a triple top, and then I confirm the lower high on the correct pivot. Remember, it's not a random pivot. It's not that it just is a pivot. That's not how pivot points work. Once again, you need knowledge, not assumptions. Okay? So, I'm reading this, and if I was a bear, I would sell it here. And if somebody sells it there and breaches 1764, yeah, this is going to drop. Okay? Big time. Okay? That's clear. So, the next news is if it doesn't do that, but instead does something different, then we can assume there's just not enough bears. Okay, and this is XAU. Okay. Okay. Now, Matrix says 1814. Then that's bad news. If Matrix is right, and I'm not saying Matrix is right or wrong, but if that matters, okay, let me read the charts again. If Matrix is right, and this hits that, gold is going to go nowhere for quite some time. That means the bull move is dead. Ish kaput. Trend is over. Okay, and we'll probably fart around between 1750 and 1800. So we're right. So we'll end up doing this for indefinitely. Right? As Matrix says, range. Well, I'm a trend trader, so to me that's a death trap. But, I could always buy the bottom. If I'm a bull, I can always buy the bottom, jam the stop, buy the bottom, jam the stop. Okay. Buy the bottom, jam the stop, buy the bottom, jam the stop. So that's gold. Okay. Bitty, 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 can't you see? Okay. This chart says, Bisone, hey Tony, I want to buy the Bitcoin. It's in a Bisone. Okay, yeah, there you go. Right? Higher high, higher low. On the row reversal. Okay, of course, it doesn't mean it will. It's just that's what it says. And if we find ourselves down here, this move is dead. Because this is what you're planning on. Living in all the fame. Yeah. Okay. I want to remind the day trading group that we will be meeting at 1:30 p.m. in the war room to cover the FOMC meeting today. And I would plan on probably 2.5 to 3 hour meeting. Yeah, boy. Goldie, Biddy, let's do some oily. Where my uptrend at, huh? Yeah, dumb money coming in the market. It's 9:29. Yeah, Theta, yeah. What time is that in Cali? I don't know, Google it. I believe you just subtract 3 hours. (1:30 p.m. ET in PT time. Oh, it's 4 hours. Yeah. Oh, 4 hours from now. I got you. Yeah. 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 So, well, you guys know the stock market's opening in about 10 seconds. What time does the stock market open? Huh? Living in a Hall of Fame. Huh? That's what time it is here. Oh. Yeah, it won't focus. I always think Jim would like this. Anyone that's into airplanes, there you go, look at that. Anyone that's into airplanes, this watch is really cool because it looks like a dial, right? Like from the instrument panel. So it's 9:30. Huh? This watch makes me so happy because just once again, today I'm meditating in the shower. I'm like, oh my God, what time is it? And I look at my watch and I can read it because it's giant. It's like 44 millimeters. It's so giant. I'm like, oh my God, I can read my watch without having glasses on. Yeah. Yeah, it's a little silly, right, Jim? Like that it looks like an instrument cluster, but dude, I can see it. It's the 0394 Heritage. If you like watches, you're like, which one is that? It's the 0394 Heritage. And I just like it because I can see it. But it's a chronograph, so I can. It's got a sweet, really easy to use timer, stopwatch. All right, so oil. Where did I trend go? It's dead. It died on OPEC Day. Isn't that interesting? Cool. Notice it topped out the week before the OPEC meeting, and then it dropped off the OPEC meeting. So maybe take a look. Do some research. OPEC. The other thing that occurred yesterday, which I guess is here, 4 hour. Yeah, that'd be about right. You want to look at China updated some of their policy. So there was a China update. And so, again, the day trading group and the swing trading group's already on all of this. We already know it, but let me share it with the Gen Pop. It changes the supply and demand equilibrium. And you'll see like Aussies come down, CADs come down, some, that kind of stuff, right? Maida says I need a talking one. Yeah, I guess so. Okay. So anyways, do some research. I would say look at the China update from a day or two ago. You should probably look at some OPEC because that meeting was Tuesday. It's Wednesday, so that's yesterday, but all that kind of stuff, right? A 3D boot camp, yeah. Truly worth the investment of time and money. All right. I got to go, yo. Papa's got to go to work. Thank you for being part of the Forex.Today YouTube family and community. If you need a broker, I highly recommend tradersway.com. If you want to learn how to trade properly, or if you want to join any of my groups, there's a swing trading group, which you have to start with. Then sort of the upgrade to that is the day trading group. And then the upgrade to that is my portfolio manager group. Oh my God, so many layers of complexity. Well, I'm not trying to sell you any of it. I'm just trying to tell you that those are opportunities. I'm on a few other guru mailing lists, and I swear to you, I get 2 or 3 sales pitches a day. I don't do that. I don't do that. I don't have a cool webinar you need to join. I don't have a cool strategy. I don't have a guest speaker that has made 97% winners in a row. And if you only learned his methodology, you can sign up. Dude, I don't do that. I don't send you 2 or 3 things a day. I don't send you anything. But if you want to learn how to trade, I'll teach you what I know. And there's videos and groups that do different things because different people need different things. So that's what happens when you've been doing this long. People ask you for stuff. So it's been created. So if you need help, reach out. fxbootcamp.com. I'll see you guys later. Cheers.